Greetings, Jonathan Camarda, Chief Investment Officer. Hopefully you're all doing well on what has otherwise been another Bloody Friday. I have to quote the old U2 song, Sunday, Bloody Sunday. Today's culprit, the jobs numbers. They came in at 263,000 added, which bested the 250,000 projected. And although the weakest number since April of 2021, it was still too hot for the market to handle because they know that Jerry and the Feds right now are looking at another 75 basis points in early November after September. As we called it about a month and a half ago, that after the initial hikes this year, that September, November would be a couple more doses of 75 basis points. And a lot of folks called 50 in November, pre-election, all that. But you heard it here first. So we'll see. But again, today's numbers do not help, and the market knows it. That's why you saw it deep red on the screens today, except for yours. So when you look at your accounts across the sleeves and the models, really over the last 1 to 3 months, very, very little damage and what we call value at risk versus the markets, a fraction of what the markets have lost. As early this year, right, early in the year, that first 10 to 15%, which is defined as a correction, you can't necessarily go all defensive for fear of having a whipsaw rally, as the markets do go through general corrections of 10 to 15%. But once that occurred, you could see that we have battened down the hatches across a multitude of strategies. And so hopefully when you're looking at your accounts today, you took some solace there, which has really been the motif over the last couple of months. And certainly after the July rally, which we participated in to an extent, certainly started to play defense with a capital D. And that fence, the one you see at football games, certainly going into and around the Jackson Hole meeting in August, which seems now like a million years ago. And the reason being is some of the top holdings across strategies, not to get strategy specific, but just across models, a lot of positions that you're in are not directly correlated with equity and fixed income. Most accounts, most advisors still, using equity and fixed income, 60-40 strategy. You've heard of it, the much maligned 60-40 strategy. We have a lot of different strategies and different holdings that when the market is doing this, is either doing this or in some cases that, right? You see them in your account. If you have any specific questions, certainly ask us, your personal wealth advisor, and certainly myself, to go into any granularity beyond what this report probably merits. Other than that, again, we do not become complacent. We become even more eternally vigilant to see, again, what this market brings. Now, generally, we're looking at seasonally a bullish time of year, right? Late October, the Santa Claus rally into November, December. Well, this year, all proverbial bets are off as we really have to assess the terrain, because the one thing the market might not have fully taken into account, besides the rate rises in the macroeconomic picture, and we've seen the damage done to treasury markets, which we can't even get into right now, is an earnings recession. Now, we called it general recession back in June. If you look back, that was after the first GDP drop. We had the second. A lot of people still saying we may have a recession. They're talking as if. What we're really experiencing is rolling mini recessions right now. We've been in it for the last few months. We called it here. But we haven't seen an earnings recession until now. You're starting to see companies that are talking about the strong currencies, accumulating inventories. So this is a very important month. Watch out for that. And that's one of the reasons, again, we have our head on a swivel, a foot firmly near that brake pedal, although we've done a lot of protective measures already. And then, of course, if we do get some sunlight, we'll look into more tactical strategies perhaps to take advantage of that. But right now, that's like talking about a Hawaiian summer on a cold Alaskan night. So with that being said, I'll spare you the howls to go along with that. But it is a privilege to serve you. We never forget how hard you worked to get to where you are, where you want to be. And we take it very seriously in trying to protect your wealth through very, very challenging times like this. So again, we appreciate your time, patience, most importantly, your trust. Can't say it enough. Stay frosty. Until next time.